Alrighty, guys, welcome to tonight's charting session. Happy Monday. Hopefully, everybody is doing well. So, today was a bank holiday. We did not trade, but it actually ended up giving us a lot of really good price action. So, I'm curious to see if any of you guys took any trades today. I know some of you, when I was looking through the chat earlier, there was kind of two main setups that I saw a lot of you guys trade. The first one was this in the morning, 9:30. 9:30 basically ended up opening, having a move higher, sold back off, ran through this fair value gap, ended up putting in an SMT at the highs. Had this little interim all here where we had a change in the state, pull back to this fair value gap. How many of you guys, did anybody take this? I know some of you did because I remember seeing in the chat, but I'm curious. Did anybody take these shorts here? Because I did think this was a nice little scalp opportunity. Just watched, saw it, didn't take it. Rules followed. Again, yeah, if you didn't take, I don't think you should, slept in. Bank holiday, if you didn't trade today, probably the best thing. Like, it was a bank holiday. I really didn't even look at the market at all until later, until after it closed. So, haven't looked at Monday charts in like a month. Win rate's better. That's what I want to hear. You have the data to back it. There you go. Would have taken A+, but I told myself I wasn't going to trade. There you go. Longevity will thank us, 100%. I like your stash, Preach. All right. And then the other setup, we ended up selling off, taking the New York AM low, 9:30 basically opened, took this recent low. We had a fair value gap to the left of us on the 15-minute. Came down, ended up bouncing off this. I like this for a possible scalp opportunity for the long side. If we look at the 5-minute, you can see we had a nice manipulation leg. The series of down close candles, we had it close above, change in the state. Market ended up pulling back to the change of the state, tapped it perfectly, and then ended up running. Target for this, in my opinion, would be the recent high and also the imbalance that hasn't, if there wasn't an imbalance that tapped in. So it's like this 1 minute fair value gap would be a possible first target. But I really like this. Also, I believe we tapped into the 15-minute fair value gap here. Yeah. So we did open up a 15-minute fair value gap. Again, change in the state, 15-minute series of down close candles, closed above, tapped back, expanded. Really nice little long opportunity there. But again, bank holiday, don't expect you guys to be taking these kind of trades, and I didn't either. So kind of where we are in the charts, I do want to take a step back and just look at where we are, talk about what we're looking at going into the morning, because we do have Monday price action now, so we're kind of looking for a profile going into the week. But what I will say is I am more bullish. And a lot of this might be looking at this and be like, Justin, how are you bullish? Well, the SMT on the bigger time frame, we know ES is at new highs. We've had this SMT here, we've had this SMT here, and now we have this SMT here. One of the things I like to understand when we have a bigger time frame SMT, or just an SMT in general, when we're looking at, okay, well, this is bearish, we want to reject, we want to see downside. I look at this in the case of, this is the initial manipulation in which we want to see a move go lower. SMT gets put in, there's a rejection, there's an imbalance to the left of us, we sell back off, but we continue to hold this bullish imbalance, and then we end up running higher. So a lot of the times, the more that we tap back into this fair value gap with an SMT on the bigger time frame, it makes me believe we're probably going to break through it. So going into tomorrow, the biggest thing that I'm looking for is, are we going to build more structure to the downside? Because we absolutely could go back and go take these previous week lows, right? There's relative equal lows here. Looks like nice sell side liquidity, but is there going to be structure that gives us that opportunity, right? Because we could continue to have another expansion week, break right through this, and have an expansion towards all-time highs. And I honestly don't doubt that. But what would I need to see happen for that to be the case? Well, this could be a market maker sell model forming. We just need a lot more structure, right? Most of the time, more generated liquidity, an easy to recognize manipulation leg, right? Something that is going to give us a good understanding of what we want to do. And there needs to be more price action, right? When it comes to weekly profile, we now have Monday price action. So we'll see kind of what Tuesday ends up doing when we open up. But right now, until we get structure, and if we are going to get structure to the downside, I'm going to continue to be bullish until that's the case. So right now, I think there's no really reason to fight the level of order flow that we're getting when it comes to how bullish the market is. So going into Tuesday, because Monday did take the recent high in just kind of where we are in price action, we had this accumulation range. We had a market maker buy model all the way up to go take the recent high that was created on Thursday from the previous week. But now that this is taken, we're at a point in time in which I'd want to see some more structure start to form. So going into tomorrow, I do want to take a look at news. We have no news tomorrow. We have actually we have 8:30 orange folder. We'll see if that does anything. Wednesday, we have no news as well. Thursday, we have 8:30. And then Friday, we have pretty much just Waller, but no red folder, 8:30 though. So we really only have one red folder news this week on Thursday. So it's curious to see kind of what will end up playing out this week. I think Monday, Tuesday is really going to give us the best understanding as to what the draw is for the week, or more so just the weekly profile. But I'm curious to see what happens in the overnight session going into tomorrow morning, because I definitely think we're going to need a little bit more structure. So normally on days like this, when we go into a week like this, when we just took out buy side, we're just now starting to form structure. The biggest thing we can do is, if we are going to take a trade, a lot of it's just going to be based off of the internal model. And what I mean by that is this price action, right? As we have buy side, we have sell side, right? This is kind of the structure we focus on. We don't focus too much on where we are down here, because if there's no weekly profile, the market's not going to really give us the move that we're looking for. So a lot of the times we'll continue to build structure in this range, and this is kind of where we're going to be playing off of a lot of the times. Where ES is, again, the same thing. ES is at all-time highs, continuing to push higher. We still have the S&P on the bigger time frame, but we're so bullish. Like, there's just really no reason to be bearish here. The best thing that we can do in this case is look for a pullback and look for an imbalance to hold bullish. That's really what I'm looking for. 4 hour for value gap. I want to see tomorrow ES, NQ, sell back off, form more structure, and look to bounce back, right? See a continuation, rebalance, hold, move higher. So this is kind of what I'm looking for going into the start of the week. If there's a way that we can look to see the market want to rebalance here, is what I'll be looking for. So for example, this is going to be our internal sell side. We want to see price rebalance to the 4 hour fair value gap. If we can continue to build structure up here, have some sort of manipulation leg, and have something like this internal model wise, I'd like to see this going into the next couple days, and then look to see again something like this, and then see a continuation higher. No reason to fight this. I think we're really bullish. Would like to see a retracement early in the week, start to move back down. But again, we'll see. We're going to react to price. We'll see what the data is given to us. But yeah, I'm excited for the week. Any questions? Any trades that you guys took last week that we want to cover? Any trades that you guys took this week that we want to go over? This is what I'm seeing as playing internal model. Yep. Again, exact same thing. Pull back to the bigger time frame imbalance, sweep internal sell side, generate buy side early in the week. Look to see move higher. Beautiful. I'm looking for the same thing. What time frame market structure shift would you need to see have a bearish bias? So we'd have to put in the low first, right? Like, for example, if we were to displace through this low, this is not a market structure shift on a bigger time frame, because when I zoom out, there's no low here, right? There's no manipulation, like there's no change in the state. So we'd have to end up building more structure here first, right? It'd have to look like something like this, where we kind of accumulate, then have manipulation, and then have displacement, and then this ends up becoming, right, like my change in the state. But we haven't formed it yet, right? Like, we haven't formed it yet if we want to go to the downside. And again, it's not a time frame thing, it's a structure thing. You'll see the change in the state when you see displacement back inside the range. And that's the best piece of advice I can do, is like, when you're looking for, when I get the question, what time frame do I look at if like buy side on a 5-minute or 15-minute, or you can quantify that. Like, I would say on average, when you're looking at a 1 hour, you want to see, 15-minute market structure shift, or 15-minute change in the state, whatever it is. But the more important thing you should be looking at is structure. What does the structure look like? If there is a change in the state and there's displacement and we want to go back to this low, we will get displacement back inside of this range, right? This entire range. If we don't displace back here, there's no reason for us to go here, right? So if the market looks like this, and we do like this, and we maybe have this change in the state does not tell me we want to go here. This change in the state might tell me we want to go run this low resistance. But again, what could happen here is we could come back down, generate more sell side, have a move higher, and it just becomes more generated sell side to then a bigger model, right? And then we have another accumulation, and then we have displacement, and then we go run the generated sell side from the previous low. And then again, you can see the more structure, that we build, the more you're able to recognize the market maker sell model only when structure is printed that way. So the biggest thing I want you to focus on is not where is the market structure shift, where's the change in the state, but is it actually make sense in relationship to where we are in price action, right? Like we have to be able to displace back inside this range if we want to go lower. And there needs a lot of structure for that to happen. Trade on Friday, super bullish. Just didn't think Orange Folder news was going to be so volatile. Anything I could have done differently? Had the same thing happen, brother. Took the same trade, same stop. Part of the game. Nothing you can really do differently. We dived into it a little bit. And we actually dived into it a little bit on Thursday too, because it was actually pretty much the exact same thing happened on Thursday and Friday for me. Two great trades. Both were stopped at break even. I think there's something that I think every trader should kind of dive into when it comes to their own strategy. When it comes to management, in trade management, what time should I move my stop to break even? Where am I taking profits? What's the risk look like? And something that I kind of came to the conclusion on in that video when I went over the Thursday's trade is a lot of the times taking profits and keeping your stop is a good way to manage your trade. Because what happens is, and let me kind of explain this and draw this out. Like for example, if we look at that trade, for example, and like we were just going to say, I'm not even going to draw too much, but like let's say this looked like a good long for me, right? And I wanted to take a long here. And let's say my original stop was down here, right? And let's say my price target was right here, right? So I want to take a long here. My trade management, let me just connect this so I can see the risk. Create, there we go. So if I, in 5 contract, oh, come on, hold on. Let's see if this can work. This is not right. Okay, that's not right. So I'm just going to estimate it, right? So let's say just 2 risk, right? 2.6, whatever. There's multiple ways to go about it, and this is kind of what I looked and reflected on after Tuesday or after Thursday. But a lot of normally what the management will look like is, let's say this is my first price target, is it'll look something like this. Enter, move higher, first PT gets hit, stop to break even, market comes back down, stops, and we move higher, right? Now, what's bad about this and what's hard about this is this type of management is good for is good for risk, really good for risk management, right? You take your profits, you're cutting your losers very early, but at the same time, you're also going to get stopped out a lot in profit or at break even, and the market's going to go back in your favor. So there's multiple ways to kind of manage this. What I found, and what I think is a good way that I want you guys to maybe think about this week, is not moving your stop. And instead thinking of as your first PT as de-risking and not taking profits. And I think that is a very good way to think about it. Is don't think about your first PT as taking profits, but de-risking. And what I mean by that is, let's say I enter long, first PT gets hit, I take my profits. My now stop, let's say I'm risking $500 here. My risk of $500, let's say I take profits here and I'm up like 800 and I take, half off whatever, unless I'm taking like $300 profit. My risk is now only 200 from 500, right? And so I'll take my profits, I'll keep my stop still down here because I don't expect the market to go back down here, right? The market still could maybe do something like this, maybe turtle soup, right? And then go higher. But it's in an area in which this trade doesn't get invalidated, right? My stop loss is in a place where I could get stopped and go back in my favor. But if I treat my stop as just a de-risking tool, and I take profits and I just take risk off of the table and don't move my stop, then I'm able to still take advantage of the move if I still think it's good, right? And I think the best way to do that and get comfortable with doing that is just lower your size, because nobody wants to do that, right? Like it's not a fun feeling when you're like at your price target and you keep your stop, right? You want to like secure your profits, and that's why you move your stop to break even, because you're securing your profits, right? It's like even if the market goes down, you don't have any extra risk on the table. You've already taken profits. So I think trading, and one thing I want you guys to focus on this week, is the flexibility to know when you should be doing this and when you shouldn't be doing this. And the best way to decide that, Justin, how do I know, is are you moving your stop to break even in an area in which liquidity is resting, right? Like, does it make sense, or would it make sense for the market to go back down there and have the model not be invalidated? In this specific case, there's a breaker here. There's been manipulation. I don't expect this breaker to get ran through, right? We can maybe wick it and then hold it, but I don't expect this to go down, right, in this specific example. So what do you think would be the best way to manage this? Enter, stop, have my price targets. Oh, hold on. Stop, have my price targets, take partials, and don't move my stop. Market comes back down, stops me out. If I move my stop to break even, or again, another way you can do this, again, it all depends on the trader. And that's why I like going over this, because this is all depends on you and this is not a one size fits all thing. Or, and this is kind of what I normally would do, is I'll take profits, move my stop to break even. And if there's an internal model as a reason why I should enter again, I'll enter again. So I'll take profits at internal high. If market comes back down, stops me out, and the market is not invalidating the model, and we then have an internal model or another entry. Because again, if I'm putting my stop in a place where liquidity is resting, then obviously I'm going to get stopped and there's going to be another internal model, right? Like this is another trade on its own. So if I get stopped out, I'll just re-enter. So I'll move my stop to break even, and I'll re-enter when the market gives me the internal model to be able to do so, right? So there's multiple kind of ways that you can go about when it comes to management. So I would say kind of test that out this week. That video you made, whether to move your stop, 100% changed the way I will manage risk going forward. Paradigm shift. Love it. Took this trade on the airplane on Friday. A very unique experience. I'm getting very close to passing my funded. Let's go. Nice little continuation. Caught the trend. Higher time frame bias, lower time frame charts included. My thoughts on why the trade failed was sell side was already swept inside an area of rejection, so no reason to go lower. 1 hour looked like sell side model to me. My thoughts on the bias was the trade failed and my SSL was already swept. Yeah. I mean, I would definitely say that's a part of it. Sell side swept. I mean, I think this was a beautiful manipulation to go long. And I think the best way to look at this is, if I can remember, this is when we were bouncing off the higher time frame consequent encroachment level. So let me pull this up. Yeah, right here. That's a paper trade, by the way. Some random like 8K. Consequent encroachment, bigger time frame fair value gap. Yeah. So this, for example, when we're especially 8:30 data highs, this is what I want you to notice on Thursday, because we have another 8:30 news driver. Data highs and lows are a very high probability draw on liquidity. So going into today, or going into this day, I distinctly remember, I'm like, watch consequent encroachment. There is a high probability we will not take sell side. We will hold this consequent encroachment level because there's no reason for us to go back. Why? This recent low tapped, manipulation, this becomes the rebalance, right? So it's sell side swept, displacement, rebalance, consequent encroachment holds bullish, as well as the candle low. Wicks are doing the damage. Candles are showing the narrative. Internal model, when we zoom into the open, what happens? Sell side swept. Manipulation, we ended up having an SMT down here. Displacement to the upside, changing the state of delivery. Pulled back, and ended up expanding straight towards the data highs. Really like that on Friday. How do you align time frame with the market maker model? I see that you scale from 15-minute to 5-minute and so on all over the place compared to so-called proper way, such as the 1 hour, 5-minute, 15-minute. Would you recommend newer traders to take these trades while aligning time frames with PD arrays get tapped? Okay, hold on. Let me really try to understand what the question is here. How do you align time frames with the market maker model? I see that you scale from 15-minute to 5-minute. So it depends what the model is on, right? So for example, if I know, or if I can, it's all recognized, right? It's not like, do I think that there's a model on this time frame, or do I think that there's not? It's what can I recognize is the draw on liquidity based off of what the market is telling me. If I'm looking at a 1 hour and I can see a clear market maker sell model or a market maker buy model, I use the 1 hour bias to then take a trade on a 15, 5 minute, 1 minute, right? So let's say, for example, I zoom in a random chart, right? Let's say I'm looking at NQ and market looks like this. What am I doing here? I'm doing nothing here. Why? Because there's no manipulation on any side of the marketplace. We have equal highs above. We have lows below. I have no idea, right? This is where bigger time frame bigger time frame confluence comes into play, right? I have no idea what the draw is because I have no extra data. And if this is my range, there's no model here, right? But let's say I have now added confluence, and let's say this is now what the market looks like. Okay, right? A lot more confluence now. What's order flow look like? Order flow is bearish, right? Let's say now I even add more confluence. Boom, there's external sell side down here, right? Or like way down here. There's a reason for price to go lower on a lower time frame. Okay, well now I have more confluence. So let's say I can now recognize that there's actually a market maker sell model on the bigger time frame. And let's say there's manipulation up here, right? It's clear. There's maybe an SMT on the bigger time frame. So now I'm like, okay, there's a bigger time frame sell model, right? So what would I need to see? I need to see manipulation internally, right? So there's a bigger time frame imbalance to the left of us. And then I look to align my bigger time frame bias. If I'm bearish or if I'm bullish, I need to see manipulation in the opposite direction of the draw on liquidity for me to take a high probability trade. What does that look like? Well, if I'm going lower, I want to see a buy side get taken, right? So we generate sell side, market comes up, we take buy side, have an initial move lower, one more time, displacement, right? And then this becomes internal sell model. We then have our manipulation leg, our internal standard deviation, and we're looking to see a move lower, right? And this is when I can recognize, again, the same thing. And it doesn't matter if, let's say this is the same thing. Let's say now this is a 15-minute chart, and I don't want to take this on a 15-minute, right? Now, you can absolutely take this on a 15-minute and just hold, right? Boom, enter, whatever. Or, again, you're aligning the market maker sell model, or I can do the exact same thing again. I then zoom in. Let's say this is a 15-minute for value gap. We're in an area in which I expect to reject, and I look for the exact same thing. Price rejects, maybe manipulation, changing the state, boom. And I enter short because it's the exact same thing. What am I looking for? Draws lower, stop in the opposite direction in an area in which I already expect to reject. Why do I expect to reject here? Because there's manipulation, there is displacement, we've had a change in the state of delivery, and we're in an imbalance, and the draw on liquidity is both lower on the internal model and the bigger time frame. So then I look for, again, the exact same thing. Internal manipulation, high gets taken, displacement, change in the state, I take a short. Right? So you're overlapping these models because price is completely fractal. So it doesn't matter what time frame you can recognize a market maker model on. It matters once you have a bias, you need to understand that time and price need to align for that bias to work, right? Because without any of this structure, there's no trade, right? I can have a bias, right? If I delete all this, I'm like, okay, I have a bias. My bias on the bigger time frame is bearish. Is there any reason I should take a trade here? No, because there's no manipulation. There's no reason why the market should go here right now, right? And that's what I think so many people focus on too much is they focus on, I'm super confident we're going to sell side, but they're not worried about or thinking about when, right? It doesn't matter if you think the market's going to sell side or buy side and how confident you are. It matters is when is the market showing you it actually wants to go there right now, right? If you think sell side's going there, but you take a short, we could end up sitting here for another fucking couple hours or days or whatever it is on the time frame, right? If there's no manipulation, because this is the influx of why the market would move in the first place. Why would the market move? 4 reasons: hunt liquidity, rebalance to inefficiencies, rebalance to equilibrium, and to generate liquidity. In this range, we're doing generating liquidity. We then have a manipulation, so we can take out buy side, stop out all the initial traders that are short, and then we'll see a move lower. But without manipulation, I can't take advantage of my confident draw on liquidity, right? Because I'm overly obsessed on my bias and not what the market is actually showing me. Does that make sense? Friday trade entered on the 1 minute after the news candle held up beautifully. Beautiful, brother. Same trade, Tyler. Good shit, brother. Would you say that your SL placement has been way too tight lately? Yeah, I would say so. I think I don't know about. I think management has been the problem. I think really what it is stops are being put in a place in which is not invalidating. But at the same time, there's times in which I want to do that, and there's times in which I shouldn't do that. I think I haven't been as flexible with it, I think is the problem, because it's more so recognizing the certain situations. I think there's absolutely situations when I do want a tight stop, right? Because it's like, if this was to happen, or like whatever I'm thinking, if I get stopped, then it immediately invalidates it, right? And even if it's tight, right? So it's like, if I'm taking a trade where I think I just want to catch this move, but I'm confident in this move, and I can have a tight stop loss, and if I get stopped, it invalidates it, then that's fine. But if I'm putting my stop in a position that does not invalidate the model, then it depends how I'm going about it. If I go into that first trade and I know my stop is in a place that doesn't invalidate the model, that means I'm ready to enter again if I need to. And I think if you're not in that point, then your stop shouldn't be there. And I think that was the case with Friday, is I was not in a mindset to be like, if I get stopped here, I'm going to re-enter, right? I ended up getting stopped, and I was like, okay, I'm going to reevaluate. But by the time I was done reevaluating, the move already happened, right? Because I wasn't in that mindset. I didn't plan for it. So I think it's more so about planning what your decision is going to be based off of what the market is showing you, because it's always going to be different. So I think that's more so the problem, is just the flexibility of knowing when and when not to, instead of a one-size-fits-all mentality. Does that make sense? So like, that's something I would definitely want to focus on going into this week, is being more flexible when it comes to the decision-making of where my stop should be placed based off of what the market tells me. And also my planning, right? Sometimes I'm going to put it on and know if I get stopped, I'm ready to re-enter. Or I'll put my stop in more looser position and accept the more risk or lower size, right? Just having a difficult time understanding price is fractal. I know what it is, but it's hard for me to find trades thinking of price is fractal. Like, I don't know when to scale down to lower time frames. I don't know what to look for on higher time frames to be able to scale up to lower time frames. I gotcha. The biggest thing, in my opinion, when it comes to just seeing it, is you just got to see it more, right? It's like, you don't, it's just like, I could like make up any analogy right now that could fit this. You can't be a professional NBA player without fucking dribbling a ball thousands of times, right? Like, you have to be, to see it, you have to see it a lot of times. And you have to be looking for it. So don't be discouraged if it's hard for you to see it or think it or execute on it, because you just haven't seen it enough. As long as you are looking for it, it will start to show more and more and more, and your eye will be trained to see it. It's a language. Price action in technical analysis is a language. That's all it is. It's like sign language. I put up a hand sign really quickly, and you're going to be like, oh my God, what are these hand signs? This guy's throwing up gang signs, but I'm actually like talking to you. And the same thing as the market. The market's speaking to you every second of the day with every candle that prints. It's being able to understand what the language is. And that just takes time with reading the language. I don't think it's I think the 15 second is the 15 second is the layer in which you see is the problem. I don't think the 15 second itself is the problem. I think it's where the stops are being placed is the problem, because the model is fine. Like, every trade that we've taken this week has been right. The bias, the entry, it's the management that's the problem. So in my opinion, it's a stop thing. And I think the 15 second just puts you in a position that's more likely to put your stop in a bad position. I think it's all just your perception of it. Because your perception of going to a 15 second is like, okay, I want to have tighter risk. I want to have a tighter stop because I don't want to lose as much, and I want to, squeeze out as much RR as possible. That's why I'm going lower to find a better entry. If you're doing that, that's fine, right? That's a fine way to think. But if that 15-second mentality gets in the way of the bigger time frame model, that's the problem. And what I mean by that is the 15-second entry could look totally fine. And that's the example with the trade I took on Friday. The 15-second entry was totally fine. My entry was literally perfect. entry was literally perfect. If I go down to the 15 second, my entry on Friday was right here. Really, really, really good risk. What am I targeting? These equal highs. But why is this now a problem though? What's the problem with this? And what do I mean by the 15 second in the overlapping of models? Because this entry did its job. This entry is in relationship to this structure, right? SMTs down here, generated buy side gets taken. So what is this? This, on a bigger time frame, is just the displacement leg. What happens? We pull back to equilibrium, and then we continue the bigger time frame model. So the entry is not the problem. The 15 second is not the problem here. The 15 second is just perceived as the problem, but it's not, because this is a fine entry with good risk, good stop loss, good management. The problem is I didn't take into this as the model, because when I zoom out to the 1 minute, it's two different entry models, right? It's two different entry models with the same bias. And that's what, again, that's when we get back to fractability. Everybody thinks we're going here. Everybody thinks we're going higher, but there's multiple ways of entries and there's multiple ways of viewing it and multiple ways of management. When I zoom out, this is actually the entry model, right? Because like I said, the original entry here is this internal model to then get displacement. I did not take profits here because I knew we were going lower. What I did not take into account is the possibility that this is a model on its own. Market structure shift, change in the state, we pull back to equilibrium, we tap the change in the state, and we then continue higher. But since I move my stop to break even, I don't take into account the bigger time frame model. So the entry is not the problem, the 50 second is the problem, it's the management that's the problem. It's not being able to identify the overlapping of models and the capability or the possibility of you getting stopped out. Does that make sense? It's being aware. It's just being aware of what the market is doing. Yeah, this was the trade. This was the trade I took on Friday, Kane. When you tap into important key levels, sometimes I feel like as you wait for price to put in a high in that fair value gap, and other times you consider the internal liquidity resting around the fair value gap manipulation move. How do I tell the difference between when to expect one versus the other? When you tap into an important key level, sometimes I feel as you wait for price to put in a high in that fair value gap. Other times you consider the internal liquidity resting around the fair value gap, the manipulation move. How do I tell the difference? I'm a little confused on the question. Can you give me a little bit more information or maybe draw it out? I'm a little confused. I want to be able to answer it to the best ability I can, though. Would you have taken the entry on the 1 minute at the top of the change in the state, even if there was no 1 minute fair value gap? I feel like there's no fair value gap. I'm way more cautious. I think that, number one, I was looking to get back in this, but it just happened. This candle shook it out. And that's really, it really was just the speed of it, I think, was the problem. Because when you're in real time, like when you're in real time watching this, and 10 a.m. opens and you just see a fat candle that's 34 points and then it gets wicked, you're not really expecting this. But again, it's all algorithmic, because what happens here? We put in a massive wick and then we just hold consequent encroachment the whole time, right? It's like this is just a wick to manipulate. And then we come down, bounce, 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 and then we hold consequent encroachment of this massive wick. So I think, could you use this as an entry? Absolutely. You're basically hitting the change in the state. This is a model in its own. There doesn't need to be an imbalance here, because it's a PD array in its own. I saw a comment on one of the Podia videos that said like I thought you told us that we can only take trades off fair value gaps. No, you can take trades off any PD array, because that's why it's a PD array. Like a fair value gap, an order block, change in the state of delivery. The market will move algorithmically either way. These are just tools for us to be able to view the market in that way. Would it be more clear if there's a fair value gap? Absolutely. Does there need to be? No. But guess what? I guarantee you there was a fair value gap. Like if I zoom in and I look into here, I can guarantee you there was a fair value gap that we bounced off of somewhere. or a volume imbalance or something. Oh, look, 30-second inverse, right? Like there's always going to be something. If you look, there's something. It's all has to do with based on structure. Like you don't have to look for the easy, like what was there that I failed to miss. Like, oh, there was an inverse here that took we rebalanced to. Like, no, nobody's looking at this and being like, oh, this inverse, I think we're going to bounce to. It's understanding overall price structure and where the draw is. And I think the easiest thing to go about when it comes to Friday is when this low gets taken, like the easiest way to think about this when it comes to bias here, easiest way, and like how my brain works, is we have a big displacement move into consequent encroachment, sell side swept in the morning, and we have 8:30 data highs. I want to see 8:30 data highs become the draw on liquidity. What would happen for that to happen? 5-minute gets ran through. Boom, there you go. That's it. If this 5-minute fair value gap gets ran through to the upside, we will go to data highs. Simple as that. Why? Sell side's taken, consequent encroachment hold. If this bearish imbalance gets ran through, we go fucking straight here. And that's what happened. But it was just a little dirty because of 10 o'clock news. 10 o'clock news was just simply algorithmic to rebalance price, stop out as much traders as possible. Again, how is the algorithm in the market going to cause max pain and then move? Put in the high in the fair value gap and then manipulate that initial high versus just the initial push into the fair value gap being the manipulation, if that makes sense. Okay, gotcha. Okay, so basically this. So you're basically saying the difference between this versus this. The biggest thing is this, most of the time, is an entry. This is forming a bias, which will then give an entry. And the reason, the differences between this is this most likely happens on lower time frames. This most likely happens on bigger time frames. But both will happen on both, right? Like price is fractal. This will happen on a big time frame. This will happen on a big time frame. Both will happen on a low time frame. But the way that I perceive this is most of the time the structure that gives you this type of move versus this type of move is an entry in which you do not need to see manipulation, right? Like you do not need to wait for manipulation in this fair value gap to take an entry. Why? Because it's most likely already had happened, right? If I was to then give you more context to this and I say it's so hard drawing backwards, but let me see. And it looks something like this. Something like this, right? Whatever. Or let's say it was here. Right? I don't need to see manipulation here to take an entry. Can I? Yeah. Zoom in and wait for it. But I don't need to see manipulation in this for value gap to take an entry because there's structure to validate it, right? But if I'm looking at the other way around, which let's say, for example, it's a bigger time frame market maker model, that is when I'm looking for manipulation of fair value gap. When it's too big of a time frame to take a trade. So like this structure is actually on a 1 hour, right? If this is on a 1 hour, I want to see manipulation in the fair value gap because then I can zoom in and take the internal model. And then I look for an entry here off this PD array, changing the state for value gap after manipulation. Make sense? Can you show an example of what you look for on a 15-second? The exact same thing I look for on any other time frame. 15-second is just an entry model of an already existing trade I would take. It's just a different time frame. It's the exact same thing. I'm taking a trade on the 15-second because I have a bias on the 5-minute, 15-minute. Davis, did that help answer your question, brother? Like if I'm tapping into a 1 hour for value gap and sweep internal at the same time, do I scale to a 5-minute, look for displacement and entry? Yes, exactly. if there's a bigger time frame bias and a reason for price to go lower or higher. Any other questions you guys got for me? How we feeling? How we feeling? Well, picked out my flaws from last week, ready to go into this week informed. Let's fucking run it, Kane. Alrighty, guys. That is all I have for you guys tonight. Great session. I'm excited for the week. Let's start off strong on Tuesday. I will see you all in the morning. Enjoy the rest of your night. Get some rest. And let's have a great week, guys. I'll see you soon. Enjoy your night, guys. Peace out.